GPK boys. I'm Nick A.
And I'm Ryan Kazera. Appreciate you guys joining us today. We're going to go in a little bit of a different direction with this show. And essentially what we're going to talk about is the new tax reporting law for card collectors. Essentially what that looks like is sales over $600 are now going to be reported. So tune in and hopefully by the end of this episode, you have a much better understanding on what that looks like.
Also want you guys to know that this is only for informational and educational basis. For your own personal tax stuff, you need to consult an actual professional. We did consult professionals and whatnot for this episode, but in the end, we're just 40-year-olds with a YouTube channel about stickers. And also on top of that, I'm Canadian, so I don't give a shit.
What we're kind of looking at is there's going to be new guidelines that require platforms like eBay and PayPal essentially report income over $600 in a calendar year. So again, that means if you're selling cards, that's going to be reported, or merchandise or whatever that might be. A lot of confusion out there on what this exactly means for collectors. But don't worry, that's what we're here for. We'll explain what you need to know, and in the end, we'll have some tips to follow up that will help you come tax time. Okay, so let's dive into this a little bit. On January 1st, 2022, the federal threshold for issuing a 1099-K dropped to just $600 due to a provision in the American Rescue Plan Act. What's the American Rescue Plan Act? I don't have a fucking clue, to be honest with you. But that really doesn't matter at this point. It requires sales platforms and payment platforms, much like eBay, Facebook Marketplace, to report a person's annual sales above $600 with no minimum transaction levels. So let's stop right there and point out that 2022 should be no different than any of the other years. Americans have always been required by law to report all income from sales, whether it has been reported by a platform or not. So if you haven't been reporting your sales up till now, shame on you.
So let's let that sink in, Americans. You had to report all sales the whole time. So essentially you were stealing from Uncle Snooty Sam. Is that the American way?
It actually sure is, Nick. Reality is most collectors in the hobby probably don't report sales unless they are actually issued a 1099. I don't have any judgments on that. I probably blew 5 stop signs on my way to do the show. So I really can't say shit.
So what, Ryan? Is the hobby over? No more eBay? No more sales? What?
Yeah, the hobby's pretty much over at this point. No, Nick. Essentially, just like always, collectors will adapt and move on. Let's take a look at some of the basics, though. It's actually the profits, not the sales, but profits that may be subject to tax. That means if you buy something for, let's say, $10 and you sell it for $15, your profit of $5 may or may not be subject to tax.
Aha! So they are tracking your digital payments. Your eBay and Etsy sales, any payments you made from Cash App, Venmo, or PayPal. Sounds like a cashless government conspiracy to me, and we do not put up with that shit in Canada.
Well, essentially, since the sales are being reported to the IRS, it'll be up to the seller to calculate the profits by deducting costs and expenses. Record keeping may be the biggest change for some collectors. Good records will save you in the event of an audit. It's also important to remember the payment platforms have 2 options for making payments. One option is goods and services for payments.
Like that $700 teal frying rind you got on eBay.
You're such a dick. It's important to remember all goods and services payments will be reported as income on the 1099-K. The other payment option is friends and family, which covers personal transactions.
Like when Mike gives his wife $5 to go to Starbucks so he can go on Deal or No Deal and search for that John Pound auto that he won't shut the fuck up about?
Exactly like that, Nick. Friends and family payments are not reported as income. However, we want to caution you that payment platforms have rules and guidelines about friends and family payments that should be understood and followed.
Oh, so Ryan, I'm dying to know, how much tax will you Americans be paying?
Well, Mr. Smartass, that actually depends on how you've chosen to classify your sales. A couple different options you have here. You could operate as a business, a collector and investor, or a hobbyist. Again, this is where you want to consult a tax advisor. They're going to determine the path that makes the most sense for you. So if we take a look at the differences between these choices, you'll notice that businesses tend to have a storefront or a website, which means their inventory is for sale on the open market. Collectors or hobbyists don't have a formal business presence. Frequency of transactions also goes down along the same line, where a collector might skip an entire year of buying and selling. Next, and this is an important one, businesses are allowed to expense things related to the operation of the business, like, let's say, an internet bill or home office space. That's a very attractive part of running a business. Expenses, also called tax write-offs, lower profits which means paying less taxes. Now, collectors can write off expenses, but only for things directly related to a particular transaction. For example, think of anything that goes into buying a single card. We got sales tax, we got shipping supplies, postage, eBay fees, so on and so forth. That can all be expenses as long as those items were part of that card's purchase and eventual sale. The huge disadvantage for a hobbyist is they cannot write off anything. Nothing, zip, zero, zilch. IRS gives them the big middle finger. Losses are going to be another thing to consider. A business can report all of its losses, whereas collectors can only report up to $3,000 of losses per year. Losses exceeding that amount can always be carried over to future years. Hobbyists can't report losses at all.
Losers.
Businesses are going to be subject to payroll taxes or self-employment taxes, depending on how it is structured. Collectors are taxed on their capital gains, much like a stock. The rate is higher for short-term profits than it will be for long-term profits. Finally, hobbyist profits are taxed as ordinary income. You guys can see here we've included the IRS form types for each option, which is helpful if you're familiar with them. And last but not least, we're actually listing the level of effort that goes into each one of these options. Businesses require a lot of work to get off the ground and operate. They're mainly focused on building profit. Collectors really just need to keep accurate records and do some basic math. It's work, but a lot less of a commitment than a business. And hobbyists really don't care about anything. Maybe they sold $1,000 this year and would rather not bother keeping records.
Lazy fucks.
In our opinion, when you look at everything, the collector-investor option seems to be the most attractive option because it's a comfortable balance of advantages and effort. So here's a couple tips for you guys. Number 1, track everything. Make a spreadsheet, download an app, use a damn paper and pencil if you have to. Just do it. Make a habit of entering the expense as soon as it happens. Or say fuck it and don't keep any records like those lazy hobbyists. Fuck those guys. Tip number 2, find a tax advisor. Find someone with a good reputation. Someone who will take the time to understand your needs. Go and ask friends for recommendations. Search reviews. Or ask that guy you caught having lunch with your wife. I bet he probably knows a good one. Number 3, have a dedicated bank account. It's a good practice to have a bank account separate from your own personal accounts, dedicated to just your collection transactions. It's cleaner this way and demonstrates your intent to treat your collection as a collector investor. It also keeps the old lady out of your business.
What?
Wow. That was a mouthful.
In conclusion, we're really hoping that this gave you a much better idea on different things to either do or not to do when it comes to buying and selling cards and tax preparation. Also wanted to say thank you very much to everybody that contributed to helping us put this episode together.
Oh, and one more tip. Never trust the guy with the banana phone.
Oh, hey Aunt Becky. How you doing? Yeah,